Yes, you may start now.
Okay, thank you very much. Hello, everybody. My name is Pooja Padgaonkar. I am currently a senior consultant in Smart Stream Technologies. I've been a part of this GLS family for over 2 decades, and I'm extremely honored and privileged to be invited to be a part of this webinar. And I'm thankful to Harshal sir and all the other teachers that we've from for the last 2 decades for teaching us what they did and for helping us to be where we are today. So heartfelt thanks to the whole team. As I was introduced, I am a principal consultant now with 17 years of experience and more. And I work for a product company based out of UK. It is called Smart Stream Technologies Limited. I'm a product champion for one of the products, which is cash and intraday liquidity management, which is helping all the or most of the financial institutions to manage their cash better, to know where the money is going, to proactively manage it better rather than react to a situation and say, okay, we are now out of business, such type of situation. We'll go into it I'll tell you more about it as we go through. So as a part of that, I obviously work very closely with each of their business groups to understand what the business is, how do they function, what are the requirements, uh, what is it that they're trying to achieve at the end of the day, and then try and uh, help work with them to use our product to better their work day and to save a lot of manual efforts for them. Um, I was originally I started my work career in uh, India, Pune, moved to Zurich, and then I'm finally settled down in UK. So we've been here for now 13 years in this country. I started my career with a service industry background with Cognizant Technologies, but moved on to a product company now. So that's a little bit about me. What I aim to do today is to first go through a bit of obviously background of Industry 4.0. It's what it is and how it is impacting the various industries along with the financial industry. And then I am going to give you a detailed example of how it has evolved our own product in the company. Hopefully, it will make more sense and I can relate to your Industry 4.0 as it is in your day to day life today. So, Industry 4.0 is not 4.0 just like that. There's a reason for it. Obviously, it's an industrial revolution over decades. So we have had industrial revolution 1, 2, and 3, where there was no. The first revolution was to introduce machinery and better the manufacturing and the industrial growth of all the industries. Then was introduced electricity, and then finally a computer, which was evolved as a part of Industrial Revolution 3. And at that point as well, there were a lot of things being done manually. It was very people centric jobs. It took very long. I mean, as you've probably seen, for us, over a decade ago, we never even could imagine the world today where everything is so well connected over internet. I mean, I'm in one part of the world, you all are in different parts of the world. We're all connecting over this platform without even a hitch, or without even realizing, or having absolutely no issues what at all. We can just connect so easily to each other. And so this was probably more of a vision at that time, to say, okay, we can easily connect to each other without knowing where, not needing to know where we are. And so that was only a vision at that point. There was the information technology sector, where that was a booming sector at that point, but more of object oriented concepts were the skill of the day. All these setups were more or client server type of setups, where everything is within, tightly coupled within a hardware network, and within an office premises, rather than somebody who's able to um, work from one region and the other. Whereas now, if you see, even in this COVID times, we all work for different companies, and we're still able to log in from home, and there is absolutely no issues about how do we access things that we would if we were in the office. So this was more of a vision that before Industry 4.0 was even brought in. Um, it was coined for the first time in 2011, and it was started by the German government, because after the world wars, there was a lot of impact on the manufacturing industry, and the idea was behind it was to boost the manufacturing industry, and put in ways and mechanisms to increase uh, the output of this. So as it says, it is a term which signifies the fourth industrial revolution that will transform the manufacturing industry by leveraging the power of digital transformation or digital automation in the manufacturing process. So we had the IT infrastructure, but it was not being applied to a lot of areas. And the idea was to kind of automate and kind of use that, leverage that power to better the manufacturing processes. And how they plan to do this was to use the modern forms of IT to enhance and improve the manufacturing facilities. So get higher quality outcomes with a lesser cost input, and obviously a shorter time to the market. So this was something that the Industry 4.0 was based on. um, there was no I mean, it was just a thought, like I said, at this time. And today it is such a common word that we use in so many different aspects of our life. For example, we are well connected over, I mean, phones. All our phones are smartphones. We use different kind of apps, like it was said. We have Facebook, Twitter, Instagram. When we have devices like Alexa, which tell you what to do, is this is your time, this is your shopping list, this is what is happening. There are driverless cars, which you just have to, the people can then, using all these technologies they have come up with, you know there is Netflix that uses this to say what have you watched before, and what they will suggest to you what is. So there are these aspects that are being used in all these concepts are being now used in very regularly in our different aspects of life. Industry 4.0 was, it had some basic principles that they set up, or there are some design principles that they based it on. And the first obviously was uh, the ability of the machines and the devices to be able to connect to each other. So if I have, say for example, a very basic thing, if I had a very basic television in the house, if it cannot connect to the other devices in the house, or if it cannot connect to other networks, then there is no way they can progress with that. So the first obviously concept was the interconnection, which was the ability of the devices to connect with each other and the people. The second one was the information transfer. There's always been data in this world. There's lots and lots of data, but the change that we are seeing now is to be able to gather this information, to gather this data in the right way, and to apply it and to analyze it and to make decisions based on this data. So that was the second principle, which was the basis of Industry 4.0. The third one was the technical assistance. So obviously we had the machines, we had the people, we had the data, but we didn't have the right technological setup to kind of use all this available to us, and to better the use of systems, and to better the outcomes that we were getting from these different industries. So that was the technical assistance that they needed. So the information technology sector was used to the fullest. And finally, to be able to do these, achieve this, they wanted to break it up into smaller tasks. So basically the ability to perform a task autonomously. So break these up into smaller tasks, and each task then autonomously finishes its work and then talks to the next component. In that way, they could achieve, or they envisioned it to achieve what they wanted to. So for example, uh, you have apps that are being developed, right? Each app has its own purpose of it, and then you connect over from one app to the other. The data is then being passed on to say, um, okay, this is something that was processed or this is something that the user is using. How can I then use, or if you example, if that Kedar put up in the previous one, say if you're accessing a particular information, if you're looking for hospitals, if you're looking for homes, when you then access your other apps, all you see is, okay, the person is looking for a house somewhere, so please give them links where they can look for accommodation, or they can look for. So that is the way, that was the idea of decoupling the uh, tasks. There are a few concepts or technological terms that we have as a part of Industry 4.0. I'm just going to go through a few of them, because you'll hear a lot of these, or you've already probably heard a lot of these over the period of time. First is the Internet of Things, which means it's the same thing, which is how do I, it's a concept that connects different physical objects like machines and sensors or devices, and all, and that is called the Internet of Things, which is to be able to link them. The industrial Internet of Things is the same connection between data and machines, but it's more to do with the manufacturing world. Big data, as we have seen, is the data is the basis of all of this. We've always have data, like I have said, there are large sets of data available, both structured and unstructured, but it is a matter of compiling them in a way that can be more organized. It can be analyzed to actually kind of bring out trends and associations and opportunities. That is that is the basis for this Industry 4.0, I largely believe. Artificial intelligence is nothing but how it is a technology that enables the computer to think or act in a human way. For example, um, as a human being, if I am at a crossroad, if I have to go to reach to a certain place, I need to make a decision whether I go right or left. Similarly, the machine should be able to take that decision to say, okay, what do I do next, without interference from human. That is artificial intelligence. Machine learning is this ability where once you have these algorithms that you have developed, once you have given this artificial intelligence to a computer, is their ability to um, that they use these algorithms over and over again, and they improve on their own. It's a self-learning for the machine. It is how they can then better their own logics and all algorithms and get to the end result quite quicker. And finally, when you have devices that are able to connect to each other, when you have data that is set up and stored in a structured way, when you have the algorithms or the artificial intelligence behind processing this data, when you have a machine which can use all of this given to it, you also need a setup where you can put all these things up, and that's when cloud computing comes into picture. And it's the practice of using interconnected remote servers. So as I said, back in 2 decades ago, it was more a very local client server kind of remote setup that used to be used in the industries. Whereas today, we are we are all connected over the internet, and we can access our setups from anywhere in the world. So cloud computing enables or betters that in a lot of ways. Please stop me at any point if you think I'm going too fast, or if you're not able to hear me clearly. So um, this Industry 4.0 obviously has impacted various aspects. Like I said, obviously the manufacturing industry has uh, have had a lot of improvement with the Industry 4.0. I mean, we can obviously see things to market are quicker, the capacity to manufacture at large scales, less manual human effort being required. Um, so manufacturing industries obviously benefited from it. But along with that, with this Industry 4.0, every phase, every industry, education industry, I mean, like we're saying, we are COVID, we are all able to do our sessions online, we are able to work online. So education is also benefited from it. product life cycle. So something that took a lot longer to come into the market is taking a lot lesser because it's all well defined and it's all backed up by this industry 4.0 medicines and pharmaceutical companies. So we all know that the vaccine for COVID-19 has been one of the quickest vaccines to be brought to market. It obviously uses a lot of research and data and more about this, the information about the virus to be able to make up an antidote for it. So IT security, obviously, because again, you need to secure all your information that you have. So all these different various industries are benefited from Industry 4.0. But I think there is a major benefit that the financial services sector have had after Industry 4.0, and and a lot of companies are still in their very early days of using some of these features available. So I'll go through some of them. So obviously the financial sector has a lot of, again, areas. So it has impacted on obviously our day-to-day banking, our insurance firms, mortgages, which is nothing but loans and borrowing money, forex, which is conversion from one currency to the other, stocks and tradings, where everything is now happening digitally. Investors are now using algorithms to determine in a lot quicker way as to what should be invested into and what are the trends like. Um, and apart from there, in each of these sectors are thriving due to the thrust of digital innovation, obviously, and the financial process automation, which means it's the processing is so quicker and it is so to the point based. It is data based. It is not a gut feel. It is not oh, this is what I feel should be happening. That they have benefited from it in different ways. Some of the examples that I have mentioned, I mean, from these different areas is like mobile devices. In the good old days, we were used to walking into a bank and doing all our banking activities, and especially for developing countries, that was also a challenge. Now everything, I mean, you have a mobile device, you can set up an app, you can log into your bank, and you can easily access your funds. You can request for any of the banking activities that you would have to physically do at that point. So obviously this would not have been possible without the Industry 4.0. In the US, for example, 70% of their trading decisions are based on the algorithms that have been developed over the period of time, and only a few, or about only 10% of them, have actually been are actually being taken by individuals. The rest is just, you know, the decision has been made and there is somebody supervising it and making sure that it goes through. So that saves a lot of time. It is lot quicker to react to the market, and it helps them obviously make a lot of money. And then technologically powered loans. So for in very small places and in developing countries, people who have do not have access to these gadgets, people who have not don't have the right kind of information, not the right kind of education background, this due to this technology, um, they have been able to reach out to these kind of disadvantaged people even in the rural areas, and yeah, giving them small amount of loans, which was probably something that they would never even think about before, um, has been enabled. So this technology has powered that, to be able to reach out to those people and then to give them those benefits. And finally, the crypto banking system. So we are all used to our normal way of using currencies, precious metals like gold and silver. And then, but the new way of going forward is going to be digital currencies, which is, we've got Bitcoin, we've got Ether, we've got a few coming up, and with Elon Musk supporting it in the last few days, I'm sure all of us are going to be, or some of us are going to be already thinking about it eventually. So as I said, there are a lot of benefits that the financial services industry has gained out of it. I'm going to just pick a few of them and go into details. And so, for example, the fastest financial transactions globally. So before, what we used to have is, we would say, for example, if I had to initiate a transfer, I would go into a bank, even if it's my own between my own accounts. I would go into a bank and I would request for a transfer, and the transfer would take a couple of days, typically, going forward. Whereas now it's one click on my mobile app, or I have to just log into it on the browser, and the money is transferred instantly. So that's the quickest, or some transfer, or there's a very clear benefit that we can see in our day-to-day lives. The second one is the easiest access. Obviously, and it's that access is available around the clock. I could do these banking transactions only within their working hours. Obviously, can't do it within weekends, can't do it on public holidays. But whereas now, sitting in my own home, I can do this at my own convenience, at my own time, and rest assured that the transactions have gone through when I need them to. So obviously, it is the easiest access around the clock. The next one I think I'll pick up is the removal of middleman and central regulation. So, I mean, trading before, we didn't have these demat accounts, we didn't have these online banking access where I could buy and sell trades at my own convenience. There used to be a broker. I mean, I'm talking about even before the demat accounts came in. This is and then so there is a middleman involved. So there is obviously a lag involved. We reach out to say, this is what I want to buy. The middleman would then execute the transaction on your behalf, and then and then it used to be a paper traditionally that you used to get. From there, we moved on to the world of demat accounts, where we could do it online, but we still are um, we are getting rid of the middleman or a person. It's all it's all computer based. It's all you're not dependent on anybody else. um, Increase transparency and trust. Obviously, when I initiate a transaction, I can track through it and to see how far it has been, or if there is a issue with it, I can straight away find out that, okay, the transaction has not gone through. I can reach out to my customer service and say this has not happened. So there is a lot more transparency, and then a lot more trust, because I can see what is actually happening with what I initiated. uh, and The other one is obviously reduced frauds and burglaries. Because everything is online, everything is secure, everything is data based. uh, there is less human decision making. There is less human. There is a reduction in the number of fraudulent activities that can happen, and people can cheat you up. So, for example, if you're dealing with a cash, there are a lot more chances that you can be burgled. Whereas everything is online, there is a lot lesser chances of that happening. And finally, based on all of this, a very high or increased customer satisfaction, because I'm able to do it at my convenience. I'm happy. I'm assured that it's a secure transaction. I'm also assured that everything is transparent to me. So all in all, it brings an increased customer satisfaction to be able to use all these technologies. Now, I quickly whizzed through a few Industry 4.0 technologies or the concepts. I'm going to be focusing on the artificial intelligence bit of it, so that I can then I want when we go through the product, this is what we are using, and I want to be able to I'm just giving you a bit more detail so you can appreciate it when we go into the product details. So as we said, artificial intelligence is the capacity or the ability of a computer to think like a human being. And once it starts doing that, it's obviously going to be it has a lot more uh, capability than everything being manually done. So it is the future of banking, all kind of bankings, retail, corporate, investment, as well as private, as it has that power of data. So humanly, say for example, if we have a if you see in the corporate world, if different businesses apply for example, loan to the bank. For a person to manually process these and to be able to um, conclude the loans would take a certain number of time. Whereas if everything is done being digitally, being done by a computer based on the data to say what is the background of the organization, how many employees does it have, what is their assets, what are their cash liquidity available, then it is a lot quicker process. So it is powered by the advanced data analytics, and it is obviously um, uh, it is and then because of this power, it is able to process quite quicker, and at the same time it is able to combat the fraudulent transactions, or it can quickly spot as to, okay, this doesn't look to be a genuine request, and I'm going to be putting this into a further investigation bucket. So that is when you apply for a loan, sometimes it gets referred to an underwriter. That is because when the information that is provided, uh, these logics or these concepts or these algorithms spot out that there is something not right about the application that has been processed. Either the information is incorrect, or it is not matching the records that you can globally access, or your credit records are not reflecting what you have actually specified in your application. So artificial intelligence is actually it's a massive gain for all aspects of banking. And then apart from that, we have features that we have. So as AI bots or digital payment advisors. So AI bots are nothing but it's a small standalone application by itself, which allows you to automate things. For example, when I call my bank today, I'm not it's not being answered by a person straight away. There are questions where it says, are you trying to access your account? Are you just trying to know the balance on your account? Are you trying to report a lost card? Are you trying to open up a new account or a new business with us? It asks you these for these options, and it based on your selections, it takes you to the relevant department, and most of the times they are able to resolve these using an AI bot or a machine behind it, which directs you to the right information. Only in a very small percentage of cases where there is something that it's a case which is very unique, and the algorithms are not set up as to what the customer is trying to access. That is when they redirect you to a person. So the amount of human intervention or this thing is reduced so significantly. At the same time, my as a customer, I am served quite quickly. So um, there are these features, and then digital payment advisors, like I said, they say, okay, are you looking for a payment to be done on your behalf? And then you can just set up a payment online rather than somebody having to do it manually. And then there are fraud detection mechanisms, which we will go through in a minute. So all in all, um, a massive win-win situation for the banking industry. I wanted to go into how this AI is in action being used in the various departments or the various areas of banking. So as I said, it provides a faster, more accurate assessment of a borrower. So when I approach a bank as somebody who needs a loan, it will say, okay, what is your history? What has been what is your income? What is your spendings? It already has all that data available. uh, are you able to see the screen? I think it has. Can somebody let me know? Am I audible? Are you able to see my screen?
Yes.
Okay.
Yes, Pooja, we are able to see the screen.
Okay, thank you. Um, so when
Pooja, if you
I
are able to hear me, we are able to see the screen.
yeah, I can hear you, sir. So, and I think my screen had switched off, so I think you should be able to see it as well now. Thank you. Uh, so when I approached them earlier in the old days, if you
Pooja,
yes, can you hear me, sir? I'm here, sir. Hello?
When I able to hear me, we are able to see the screen.
Yeah, I can hear you, sir. So, I think my screen at switched off, so I think you should be able to see it as well now. Thank you. So when I approach a bank, it used to be
Yes, yes,
via.
please go ahead.
Yeah, sir. Hello?
Yeah, please go ahead.
So when I used to approach a bank, it used to be approaching a bank manager and saying, "Oh, this is I need a loan, either a personal loan or a corporate loan," and it would be um, completely up to the individual to be able to assign or approve that loan or reject that loan. Whereas now it is a lot more algorithm based, a lot more database to see my credit history, to see my accounts, to access my expenses. They have all that data which is available to them, and it's um, more accurate, and it is more real than actually somebody sitting there on in the authoritative decision saying, yes, I am happy to approve your loan or I am not. So all this is being done using AI algorithms. Credit scorings are provided, and there are more sophisticated rules compared to the traditional credit scorings. And then it helps the lender to say, okay, this is actually a genuine applicant who is not a high risk applicant, and we can do some business with the person and approve their loans. And all loan issuing, or many of the digital banks and loan issuing apps, use these kind of algorithms today. So um, the process of actually applying for a loan eligibility and to access one is a lot more easier and a lot more database than based on like I said, based on a personal decision by some individual in the organization. Uh, Now, along with this, like I said, the um, the uh, credit decisions are all being made algorithmically. At the same time, they also need to make sure that they prevent all the fraud transactions. They capture these fraud transactions. So if I, as a user, I'm based out of London, and they can see my spending patterns. So if they see I spend a certain number of amount on a weekly basis, on a monthly basis, and they can obviously trace my location. So they said these are the areas where she usually shops for. So if I go in from, and I have had this personally on my own, where when I went to travel to another country, um, and I spend it in a different currency, my bank instantly stops those transactions, and they reach out to me and say, have you actually done this transaction? Because it's in a different currency, it's in a different location, and it's a different, it doesn't seem, the amount doesn't seem to be your based on your usual spending. So do you still want us to approve this transaction? And that is when AI comes into picture again. So they have observed my patterns, they have observed my data usage, and picked it up to say this is a different pattern to her usual card spending, and that is when they reach out. So again, human intervention is to the minimum. And then the banks also employ these to recognize suspicious activities. For example, there was a situation here a couple of years ago where a lot of our colleagues had their bank, there was some money withdrawn from their banks. It was showing as a cash withdrawal, but the withdrawal was like 10,000 and 50p, for example. You cannot withdraw 50p from a ATM machine. So back then it wasn't picked up by the algorithms. It was the people who observed it and contacted the banks. But I'm sure if there is a transaction that shows up in your banking activity today, all these algorithms will pick up and say, this doesn't look to be it looks to be a suspicious activity, and we need to block this. So it is making it difficult for the hackers and the people trying to break into accounts. AI in the trading world, as I mentioned before, um, trading is impacted by a lot of things. So it is got structured data, which is your company information, which is your how the business is doing, how the market is doing. At the same time, there are unstructured. There is some fluctuation in the political world. There is a pandemic that hits the world. So trading gets hit by all of these parameters, and sometimes a decision has to be taken in a fraction of a time. If it is all being done, if it is done manually, it would take, I mean, it would not be as effective as it is today. A lot of trading platforms now use this AI based logic, where it kind of picks this up and says, okay, for example, when COVID started, it impacted all the trading, or it impacted the trading world, because people didn't have the money. It was like, where are we going to get the investment from? So it would pick up and say, okay, what is the impact that we see as a business, and what are the areas that we should be really being trading in to continue our to continue investing in. So uh, AI massively helps to take those decisions, and it predicts those using algorithms to say these are the stocks that should still be stable irrespective of these structured and unstructured impacts, and then we can continue to invest in them. And it puts together, AI uses all these algorithms, and then it'll put together a recommendation and say these are the strongest portfolios that we recommend, um, based on the investor. So this is the money that I have. This is whether I have a short-term loan, whether a short-term goal or a long-term goal, and then it will recommend to me to say, um, these are the portfolios that you should be investing in. Personalized banking, I've already given an example. Like I said, when I call them up, I'm redirected over a phone line to say, do you want to access your do you want to check the balance on your account? Do you want to do if it's a credit card company, you would say, do you want to pay off your credit limits? Do you want to stop our doing business with us, or do you want to open a new account with us? So AI is doing all of that already. So there is less people, and they can service more number of customers at the same time. Every business has a lot of risk associated with it, and it's the process of identifying or accessing, assessing these threats to the organization or to the business. And finance industry is all about money, and so it's the highest. It is an industry which has got the highest risk in it, and they all need to manage this risk well. So. All natural disasters, IT threats, all of these can impact the financial industry. For example, if we have if somebody is hacked down, which we had here in the UK a couple of months back, where they hacked down our NHS, which is our National Health Service systems. The medical associates are not able to access patient data. They were not able to log into the systems to do anything of that sort, and there was a ransom being asked for. So along with this AI comes the power of also managing this risk better, because you can then um, already analyze the history and raise an alert to say we see this is a risk to the system and you need to manage it. So it has got enormous processing powers, and so it can look at all the data and very quickly say, okay, um, you need to action your risk, and otherwise you're not going to be able to um, uh, do the real-time activities, or the market is going to have an impact on the business as such. So risk management is always been a major part of the financial industry, where unless you have your assets and collaterals in place, and if your risk management is place, you're not allowed to. Regulators can come in picture and say you're not allowed to do any more financial business because you're not able to support your own, or you're not able to back up your own risk, or you do not have any assets that you can actually use to cover up your risk. So AI algorithms are helping massively to analyze the data and bring up and suggest a risk plan for them. And finally, the process automation, because everything is algorithm based, everything is data based, and everything is computer based. It is quite quicker than it would be in a manual or a human being doing it. So along with it being quicker, it is also that some of these mundane tasks where you can generate these reports, or you can review some documents, or you need to extract information from different parts, can be done automatically without somebody requesting for it, or a human actually spending time over it, and they can actually concentrate on other bits which require more of a human effort rather than these mundane everyday tasks. So there's a lot of process automation in various parts of banking. Eh, So we've gone through AI and its impact on some of the financial sectors or departments. A little more about my company and what we do. So as I said, we are a financial product based company, and our solutions span the transaction life cycle. And there are massive benefits that we are seeing ourselves from the Industry 4.0, or the new technologies that are coming up. Some of the products that we have are the cash and intraday liquidity management product, which is capturing transactions from all the internal and external sources. And it creates a single global view of balances for the bankers, for the investment managers, for the private investment managers, to help they help the customers and the bankers to know what the situation in their accounts is, and whether they're short on money, whether they're long on money, whether a certain bank, when a certain bank goes bust, like we had Lehman Brothers going bust in 2008. With a solution like this, you can instantly know, or very quickly know, what is the impact to you as a organization, because all the money that you have with that bank is no more accessible to you. So what is your bank? Or for example, if you have a bank go bust in India, obviously it is a massive hit to the personal people who are holding all their personal money in the banks, but there is also an impact to various businesses with it. So that is what this product does. Corporate actions processing is um, every time, I mean, some of you might be doing trading, but every time there is a bonus announced, or whether there is a dividend coming out, or the stocks are split, this has a financial implication um, on the different businesses and the different banks. So this corporate actions processing um, solution of us helps track and um, process these kind of um, changing details and impact of it on and especially in a very short duration, on a pressure situation where suddenly it changes everything, where the stock markets have gone up or gone down, and there isn't enough backing to it. So this corporate actions is used to handle those kind of situations. The third one is a reconciliation management, which is we all in our day-to-day lives reconcile our own data, whether it's in our accounts, whether it's in our own sessions, or whether it's in our own homes. Reconciliation is nothing but to kind of match what we are expecting to happen versus what has actually happened. But this is more in the financial world, where to say I want to match my payables and receivables. So I have to say this is what I want, this is what my spending, and this is what my receivables are, and at the end of it, the net should be zero, or the net should be, I should be having so much surplus in the account. So reconciliations is kind of taking all those um, payables and receivables, and kind of automating to see whether the the um, the sum at the end of the day matches the expectation. And last but not least, the collateral management and reference data. Obviously, in the banking world, apart from the currency, you need to have collateral to back up your business, and so collateral management helps do that. And finally, reference data, which is all of this is based on some reference data. You need to have custodian data, you need to have client data, you need to have book data. So all of this has to be stored somewhere in a way which is accessible. So our reference data solution provides that information, and it works with different clients to make the right kind of information available to them. Um, we'll go a bit more into reconciliations, and then I'm going to cover how this reconciliation world has changed with pre-AI and with the AI or with the industry 4.0, how our we can actually see a change in the way our transformation our products are being transformed and being having a great advantage over our business. So reconciliation, as I said, is, I mean, in the good old days, it was done manually. So all the people working in the, or having for some family working in the bank during those days would know that it used to be a manual reconciliation of all the deposits that have come into the bank, take away all the payments and all the outstanding amounts due, or any expenses due, and a tolerance for any of the errors, human errors, and that balance would then have to, this was at each account, and this would then have to be done at the book level as well. So at the end of the day, when a bank closes the day, their collectibles and their expenses have to sum up to what the actual balance in the bank is at that point, without which they cannot really close the business day. So that is what reconciliations is, and we do this in our product. And you can, as I mentioned, we do reconciliations can be for various things. So we reconcile cash, which means we take in all the cash inputs to say these are the payments and these are the receivables, and this is the net sum at the end of the day in the system. There are digital payments that we reconcile, which means all the credit card payments. There are such large volumes of these to be processed that if somebody has to manually go and process this, it can take a long time to do that. So our product helps reconcile those. And finally, along with cash and digital payments, we also do securities. So reconcile the trade settlements and the transactions and the holdings as such within the bank to say not just the cash, but this is what the securities you hold in the day. How it is done in the product is something like this. So we have you obviously need to input all your data into our product, which is if you're reconciling cash, you need to input all your statements, all your payments, all your receivables into the product. So the product has the capability to read these inputs. Based on these inputs that are provided, this data is really analyzed by a consultant, and to define a set of rules that we think um, can be defined to reconcile this data, to say, and some of the criteria that you can use is, you can say the specific type of transactions. For example, it's a cash transaction or it's a security transaction. If it's a cash transaction, what kind of transaction code should it have? What kind of client references can it use? And if this is the client reference, what kind of rules can be applied to it? So all this data is then analyzed by a consultant, and a set of rules are defined to reconcile this data. So you define a parser rule, you apply it to each bank account, and you already have your statements in. It will then apply these rules to each of those transactions, and it will give you at the end of it to say, this is what I have matched. Say, for example, if you have got 100 transactions, it will say I have matched only 80 of them. The remaining 20, the rules that you have defined, they do not fit into any of those rules. So then you have to reanalyze the remaining data to say what is missing in this, because there are a lot of situations where we do get transactions, but they do not have the right kind of information in them, or they do not have the other side of it received. So we also need to cater to these functions. Also, sometimes, say for example, a bank issues 3 payments, but it will come back as a reconciliation saying the bank has, it will not come out as 3 different payments, but it will say I have spent X amount of money as a result of payment to these 3 different parties. So you need to be able to identify these one-to-many situations as well, along with a one-to-one. Or you might say that, okay, I have got to make one payment to my client. However, I'm going to be splitting it into 3 payments from the bank. So that's a many to one situation. So there are all our rules should be able to cater to these different type of business scenarios and help us reconcile the data. So in the product, when you've got the data, you've defined the rules, you've applied those rules on the data that you've applied, and then you can actually, that is when you can actually find out whether you have achieved the match rate that you, there is a minimum amount of match rate that is defined by different financial organizations, and whether you can you have achieved that. And if you have not achieved that, then you need to you need to define tolerances, you need to better your rules, you need to define additional rules based on the analysis of the data that you have done, and finally get a set of rules that can help you automate these reconciliations every day. Now, some of the challenges that we face um, to set up this in a product pre-AI was, obviously we need to have every bank or every institution might have a different format of the payment. So some of them can use um, market standards like the Swift messages coming in or the ISO messages coming in, whereas some of them can have a legacy solution in there within the bank, which they will use to provide us that information. That can be their own structure. It can be an XML, it can be a CSV, it can be anything. So we obviously need to be able to read the data that this bank provides. So we need to have set up input properly. We need somebody who can analyze the data. Obviously that takes time to be able to write that rule up. That takes time to be able to then test it on a sample data. And if it doesn't meet the match rates, then you have to reiterate your rules. So there's a lot of challenges um, with and obviously finally you need to simulate and test this in various environments before you can really hand it over to the business and say, these are your set of rules that can help you to reconcile your data on a daily basis. So um, though it is automated, there is an initial lag time to it, and there is a implementation time to it. And these type of projects can typically take up to even a certain number of months. Because if the data is massive, then there is a lot of analysis and there's a lot of thought that needs to go into it before these are defined, because you don't want them to match to a incorrect data and give a wrong picture to the business. So this is what happens in a product pre-AI. Now with AI, and a lot of companies are still in a very initial days of implementing AI within their products and solutions. With AI, life is so much more simpler. I mean, there are algorithms already defined uh, for matching data up. There are set up so that it can read any format. So if the client gives me a CSV, I can feed it a CSV. If the client gives me an XML, I can straight away give it an XML. If they have their own file structure, they can give me that file. All I need to do is just load it, and the algorithms will be able to read that, or the input setup. So I don't have, there is no time or investment into setting or creating that kind of implementation. Um, Obviously, because it is using all the AI technologies, the match rates and the algorithms are a lot quicker um, than the traditional ways of technologies. It allows you to, apart from the algorithms that it has defined, it allows you to define your own rules, additional rules if you want to. So if it has matched most of them, but you say, no, I want to change the rule. I do not want to match field A to field B. I want to match it to I want to match field A to field C. You are able to do that as well. You can also use standard APIs with it, or you can define your own API and quickly plug into our products. And finally, because it's hosted on a cloud, it's accessible to anywhere from anywhere. There's no restriction to how it can be, and it is very easy to scale it up as well. So if for example the volumes for a specific client are very high, then we can easily increase the infrastructure requirements and host it on a cloud, or we can add some more processing to it without or seamlessly without the client realizing that this is happening behind the scenes. And it is all maintained by us, so it's a lot more easier for the clients as well, because they don't have to have a somebody within their premises. They don't need to have a machine which has this running. They don't need to make sure the networks are fine, the connections are fine. They don't need to worry about the users needing to set up access for the users. It's all being done remotely for them. So post AI, obviously life is very different, where, like I said, it is clever enough to understand all the input formats without, oh, I have a new input format, I don't know what to do with it. And processing time has reduced massively. So something that used to take hours is now taking minutes. It allows me to change it if I want to, obviously, and it can easily integrate with any other external systems as well. So there is a lot of benefit that we are seeing in the product world. And we slowly but surely, a lot of companies are moving into the industry 4.0 or the post AI way of life. I would like to end my session here, and thank you for this opportunity again. If there are any questions, do let me know. Are we good?
Students, any queries? Okay.
Pooja, I simply would like to ask you one question. That is,
Sure,
how do
sir.
you think the future banking is going to happen?
I think it's going to be a lot more digital than we have today. So we obviously, it's all based on, like I said, currencies, defined currencies for different countries today, and it's all based on precious metals. But going forward, I think it will be more of the digital currency that will be used across the world, where you do not have any physical currencies that you deal with, or the value of it different to be in one currency in one country versus the value of it in another country. So I think it is all going to be sooner, not so soon, but eventually it is all going to be digital currency based, I think.
Digital currency that will be used across the world, where you do not have any physical currencies that you deal with, or the value of it different to be.
Thank you, ma'am, for sharing your knowledge and experience, and sharing the experience of significance of Industry
Okay, thank you very
4.0
much.
on financial services. I take this opportunity to thank all the eminent speakers of the day, joining us across the globe for taking time out of their busy schedule. Though they have a different time zone, even we can see in the back the clock. Thank you so much for working us apart from your, we are having different time zones. Your expertise and brilliance will definitely generate an intellectual impression in students' life. Thank you so much, ma'am. Last but not the least, thank you one and all present here on the day 2 of Cybershadez 2021. Thanks for making the day memorable. See you all tomorrow on day 3 of Cybershadez 2021 with various UG and PG events. Thank you and have a great day ahead.